Entrepreneurship is great, but can also seem overwhelming. Wouldn't you like to know the pros, opportunities, and problems with different business and investment strategies before you jump in? Well then, welcome to Entrepreneurship Exposed. Welcome to another episode of Entrepreneurship Exposed with your guy Beez, where we talk about everything related to entrepreneurship, but always with a twist of business acquisitions. Now, I know I say this every episode, and I'm going to say it again. We have a great guest that's here today, and he's going to help us to expose the world of stock market investing. And we're going to go right into the introductions right now, because y'all need to know who this brother is and what he's been doing in one of the key ways of creating wealth. So welcome to Entrepreneurship Exposed, my guy, Tay Sweat. What's good, bro? How you feeling, man?
My man, thanks for having me, man. I'm feeling good. And hey, we've been waiting to do this for a minute, man. So I'm excited.
Yes, sir. We have been waiting for a minute. This should have been like a year ago or so, but we're here now.
Absolutely.
But hey, give a little bit more insight into who you are. Introduce yourself to the audience. Let them know more about what you do and how you got to where you are today.
Hey, man, look, I'm gonna keep it short and sweet. The number one thing I tell people, I say, look, I'm just like you. I come from single mom, raised in the hood. I was overweight child who studied his way to losing weight, getting rid of diabetes, starting a business, taking the money from the business that I made and started investing it. So that's who I am today. I stock trade for a living. That's like my life. And of course, now I'm helping other people do the same.
So, of course, I'm going to say, well, you shouldn't have business. You should have acquired one, right? But that's a different discussion.
Absolutely.
We didn't know about that back then anyway. I didn't know. Most people don't know and realize that we can get that head start through acquiring a cash flowing business. But here's the thing for everybody in the audience. There's three major ways of creating wealth in this world, right? Not just in this country, but in this world. The first is real estate. Now, I challenge all my real estate investors that come on here, because real estate ain't as great as people think it is, or as how it has been historically, right? And most of them who are professional real estate investors, they agree with me. They're like, yeah, that's why I'm diversifying into other things, but you still want to keep real estate in your portfolio, right? Mm-hmm. Not so much because of the ROI, but more because of the tax benefits and the ways you could use the real estate to your advantage to help your portfolio. Right. The second way of creating wealth in this world, in this country, in this world, is playing the financial markets. That's going to be your stock investments. That's going to be your crypto nowadays and everything as well. Now, I won't mention my thoughts on that yet. We'll get into that part with you, right? However, go to the third way, and that is through business ownership, whether you started from scratch or whether you acquire a cash flowing business. Now, when we talk about the stock market and investing in the stock market, I want you to tell me why you feel that is the best way or a really great way, or why somebody should at least make sure they consider that maybe even first before the other two methods. What are your thoughts on that?
I like that question. I'm thinking on that. And I would say, honestly, one of the reasons that led me here was for the freedom side of it. What I mean by that is, in real estate, which is probably the worst. Don't get me wrong, I still love real estate, but it's the worst for the freedom side, because you are tied to so many other people. If I have an issue with my property, I need to hire contractors or people to fix things. If I need to liquidate, or let's say we don't even want to liquidate. If I just need to borrow against my property, I got to go beg the bank. Hey, here's what I need from you, right? And here are all of my financials. Please give me the money, right? So I don't like that part of it. And then, of course, when it comes to selling it, now I have to do this dance for all of these people to say, hey, come buy my place. It's worth what I'm selling it for, I promise, right? Yeah. So I don't like that side of it when it comes to, of course, what I do with stocks.
Yeah.
And then also in the business side or acquiring businesses, of course, same thing. I still kind of got to rely on people, right? So maybe I'm not working in the business because, of course, I acquired a business that should have been running already. But I have to manage people and emotions. And hey, did this person show up on time? And hey, did this? What's going on? And you have all these things that, you know, once again, you get paid for that though. But that's another side of, you know, the for me, the freedom. With the stock market, it's me and the charts. It's me and the charts, right? And when I want money, literally, it's a button push away. I say, hey, I'm ready to take the profit. So let's just say I do my work, I do my studies, I get in the right, you know, the direction of where the market's going, and I make a bunch of money. I don't have to go beg people to buy my product or buy no advertising and none of that. No, I push a button, say, it's my money, right? And it's liquid. It's instantly, literally, it comes into it, and the next day I can put it in my bank and spend it. So I do like that side of it as far as, you know, comparing it to the other two, right? And that's just one thing, but the freedom part for me, if I don't want to be, you know, I'm an introvert. So if I don't want to deal with anybody, I don't have to. Me and the stock market.
That was the most well-articulated defense of one of the three that I've heard, I think, because it makes sense. I can't argue with you on it. Now, I got other ways that we can alleviate some of the problems that you mentioned in the other two, right? There's some ways to alleviate it, especially you think of Warren Buffett when Berkshire Hathaway is acquiring businesses. Warren ain't in there dealing with those people, right? Because he's acquiring large enough businesses that have enough revenue in it that you can hire CEOs. You don't got to be the CEO of your business. Matter of fact, look at my shirt. It says self-employed crossed out because you're working in the business. It says CEO crossed out because you're working on the business, but it's still a job. And I don't want the job. I want to be the investor that works above the business. But that can apply to being the investor in the stock market too. We're above that fray, and we get, you know, some more flexibility, and we get our time back.
Absolutely.
So I love the connection there. Oh, wait, do we have a break? Oh, there we go. We're good to go. I thought.
I got you.
All right. Okay, very well said. Well said. Now, you also teach people how to invest on the stock market, right? Now, what is advice that you would give to a newbie, somebody that just wants to get in on it right now? What's the first thing that you would tell them?
Well, first things first, you got to know that you are going to lose. You're going to lose. You're going to lose. The story of losing is to make sure you lose in a way that it allows you to still show back up and play for another day, right? Invest for another day. And with that being said, risk management is going to be your number one thing you need to focus on, right? One thing I see a lot of people who come into stock, really investing, period, is they bring pretty much whatever they have and they invest it all at once. And it's like, whoa, why would you do that? Why would you do that? And the reason why I say that is because, number one, it's not smart to put everything, you know, they've always told us, our parents used to say, don't put all your chickens in all your eggs in one basket, right? Put all your eggs in one basket, right? So that's one thing. But secondly, what we notice, and this is across the board, whether you're in real estate, stocks, acquiring businesses, whatever it is, number one thing we see is when you put all of your money in, your anxiety goes up, right? And when your anxiety goes up, you can't think straight. You can't think straight. You can't see what's going on. And a lot of times you end up making not the best move. I'll say that.
No, you're right. You are right. That's why I believe strongly in the saying, you know, health is wealth, because the same thing applies. There's a reason why most people who start making some money, they hit the gym after that. They start taking care of their bodies more, their mind more, because, you know, it's a stressful game. And, you know, if your mind ain't right, your body ain't right. It's like you can't handle some of the stress that you got to deal with. So I 100% agree with you on that, man. That's what's up. Now, 2 years ago, was it about 2 years? Maybe 2 years. Maybe 3 years. I had one of my first trolls, internet trolls, right? They were like, They're like, I don't know if you can do this and blah blah blah, all this stuff. And I'm, at the time, I'm a likable person, I think. And I was just in shock. Like, why would you do that? I'm trying to help people, and you was just trolling and blah blah blah. And it was a woman. What she started trolling me on is because I made a statement, and I said that actually it was in Clubhouse, so I know it was like 3 years. And the statement was, if you're not making $10,000 a month first, then don't think about investing yet. First, do X, Y, Z, Z, Z to get to $10,000 a month, right? And I told them it's not a blanket statement, but it's just a rough number that I'm saying. And she was like, most people don't make $10,000 a month. How you gonna tell them that? I was like, I know that. But I'm just telling you, it kind of goes in line with what you said, Tay. It's like, if you are bringing your last dime to come and invest into the stock market or whatever investment, that's not going to, it may not turn out good for you. And then what are you going to do at that point? Right? So that would be my first, and I broke down why I came to 10,000. I broke down some of the things that you should be doing. You average house cost this, blah, 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 your monthly bills. If you don't already have that covered anyway, and then have some excess money coming, then you can start putting it into investments. And then I even said, and I'm telling you this because I want your thoughts on it, right? I even said that I don't even tell people so the first thing I tell them to do is to get at least 6 months of emergency fund.
Living expenses, right?
Living expenses, etc. Then don't save your money in the same way that other people save their money, which is throw it in the bank and get less than 1% interest, right? Instead, I was saving my money in an index fund tracking the S&P 500. Actually, 2 index funds tracking the S&P 500. And I just kept putting money in there, and I knew that it was getting, on average 10% returns or so. So I was like, okay, that's way better than the bank. And that to me was a glorified savings account. And then I used the earnings from it above what I put in, the earnings from it to then purchase my first exotic vehicle, to purchase this, to purchase that, to invest in other things, right? But overall, I felt that was a foundation that people needed before they should really consider true investing. What are your thoughts on that? And is there anything I missed or you feel should also be added into it?
I mean, I'm gonna add a few things, but only because I agree with you wholeheartedly, and I also say this for other things. So I'm going to add those other things. But definitely, man, you should be making, and you're pretty low at 10,000 a month, man.
I know. Thank you. Thank you. Oh man, she told me that was unrealistic, and you don't know what the average struggle. I was like, I don't know the struggle. You know where I came from. Let me not get heated right now.
Right. But I agree with you because honestly, what I normally see is, and I say this all the time for my stock market, investors. I say, listen, the stock market was not made for broke people. Investing is not made for broke people. If you feel, and broke looks like different things based on the the person, right? Yeah. But if you don't have enough disposable income, or what they may say risk liquidity, if you don't have risk liquidity, meaning, hey, if I lose this, my lifestyle won't change. If you don't have that, then you are not considered ideal for investing. That's just what it is, right? So I would agree with you on that. And then what I'm going to add in is I also say, for my fellas especially, I say, hey, if you don't make over $200,000 a year, don't get married. Don't even look to get married.
I say the same thing. I told my son. I didn't say 200,000, but I said get your business right. Like I love my kids, but I do wish that I didn't have my first child in my 20s. Right? Yeah, I get it. Getting yourself right, your business right, especially as a man, so that you could then provide properly for your family.
Absolutely. And that's kind of where I'm going. And the reason, and I'll explain it because I'm sure somebody's going crazy right now hearing me say that. Somebody's going crazy hearing me say that. But there's a few reasons. Number one, men, honestly, we are not our normal selves or optimum selves when we are making less than we want. When we're struggling, living paycheck to paycheck, you can't listen to your woman's needs and cater to her needs and take care of her emotionally when you worried about, she's ordering food across the table from you and you checking your account. why you ordering so much food, right? Like you really get, in this disgruntled state. So that's one thing. But number two, the man you have to become to make $200,000 a year is the man you need to be to attract the actual woman you want. That's how I feel about it. Right?
Ooh, I can hear the internet blowing up right now. Some people are like, hell yeah, and some of this going on the other side.
Absolutely.
I feel you.
Mm-hmm. So I've always said that, it takes a certain type of man to make $200K a year. And honestly, I know it's easy for me to say this, where I'm sitting, but it's not hard to make $200K a year if you can get like a few tenets and principles down. Always showing up on time. Always, adding value to whatever situation you come into. Be generous and add value, right? So a generous man, a man who's adding value, a man who's showing up on time, and a man, and I would say this is my fourth one, and a man who's actually taking care of business, whatever that looks like, to make and keep $200,000 a year, right? Keep making $200K a year. He's consistent. And those are four principles most women love. Can you be consistent? Can you add value? You see what I'm saying? You see what I'm going with?
It's all aligned.
Right. So for me, I've always said that because when I talk to my younger guys, I say, listen, you want the baddest woman you can find, right? You want that baddie. And most of them like, yeah. I say, listen, man, make your money, get your stuff together first. Why? Because let me just tell you something. It's dog eat dog out here. And I don't care how good of a man you are. If you bring a woman, because you owe it to that woman to be able to take care of her. If she asks that, or if you want that as a man to be a providing man, you owe it to that woman before you say, hey, come into my world, to already have it figured out, right? Mm-hmm. So what we normally see is they don't already have it figured out, and then they want the woman to struggle with them on the way up. Right? Mm-hmm. And I'm gonna be honest with you, it's dog eat dog world out here. And if you got a bad enough woman, there's somebody looking at you not handling business for that baddie that you said you wanted, and they're gonna swoop in and take her right from under your nose, right? I've seen it happen plenty of times, right? And so for me, I just say, hey, make sure you can handle business, right? Make sure you can be competitive in the marketplace. So that's my advice, man, with the money. I agree with what you said, absolutely.
There we go. So you know what I want to do, since we kind of given advice on when you're first coming in. We kind of tapped on some of the mindset aspect, right? I got a lot more on the mindset that I would give too, because over the years, I realized how important mindset is, right? In the beginning, I didn't put too much pressure on that or stress on it, because I already had the mindset of, I want to achieve. I know I can make it. I just need to figure out how, but I know I can make it. So I was motivated. And then I started changing my mindset into ways on how to create money. Right? Because that's one of the biggest things when people say that, oh, they're in their 9-to-5, they want to stay in their 9-to-5. That's cool if you want to, but you got to have multiple streams of revenue as well. Mm-hmm. Because when they pull that rug from underneath your feet in your 9-to-5, you're going to be like, damn, I don't even know how to make money other than working for someone. And then you're going to be stuck. But as an entrepreneur, that rug got pulled from under my feet in many different ways, many times, not by somebody else, not by a boss, but market conditions, economic conditions, customers, whatever it may be, I'm like, oh, damn, almost lost everything. And then it's okay. I know how to make money and get right back. Yep. So I would like you to I always keep my top books right near me.
Oh, boy. Oh, yeah. Oh, yeah. Now we talking.
The first one is my favorite, and I want you to give let's go back and forth, right? You tell me your favorite. We'll do maybe 2 or 3 of them. My favorite book in the world, Why Should White Guys Have All the Fun? The story of, are you familiar with this book, first and foremost?
Oh, yeah, that's a heavy book.
I just had to ask for formality's sake.
Oh, yeah.
So, first of all, most people don't even know about Reginald Lewis, first Black billionaire. And most people don't know about it in America, first Black billionaire. Right. And most people don't know about him. And he's like the Jackie Robinson of business. Right. So I emulated. I've read this book maybe 40 times. Right. Am I exaggerating? No. 5, 6, maybe like 27 times or so. Something like that. But I'm trying to be accurate. And I'm not just blowing smoke. This book really changed the game for me, made me realize that wow, not only can you acquire a business, not only can a black man that came from nowhere become a billionaire, but he can also do it with a leverage buyout and not have to put much, if any at all, money out of your own pocket into this acquisition of this billion-dollar business. That changed my entire way of thinking, right? So I'll start with there. What would you say is your first top book recommendation that would help that newbie coming in as well?
I would say it's a book called Trade Mindfully. I don't have it up here with me, but Trade Mindfully goes way deeper than just stock trading, right? And that's why I'm mentioning this. So Trade Mindfully essentially is a psychology book. And investing, for me personally, if you ask me what's the number one thing that goes into investing, whether it's real estate, stock market, acquisition, it's all psychology, or like you said, mindset, right? Yeah. And in this book, it talks about how a lot of us like to do what's we have what's called recency bias. And basically what that means is if we see, for example, your cousin starts a business, they buy a building and the building burns down. We then go, oh, every time somebody starts a business, it burns down. I'm not going into business. You're using that last thing that happened to dictate where you're going, right? And your actions in the future. And what I notice is that this is what happens to a lot of people. And not just in business, it happens in relationships. Oh, my girlfriend got cheated on. People ain't, men ain't ish. I ain't doing this. And it's like, no. You can't use that last thing that happened to you and make it dictate where you're going, right? Yeah. So Trade Mindfully is definitely, it's a solid book. Solid book.
I love that. I have not read that one, so now I got one to add to my list. Now I'm afraid to give you my second one because I know you read my second one, but it's a guarantee you read my second one. So maybe I should give that one. I'll mention it, but I'm gonna highlight a different one, right? Because we'll only do two each. So my second one that's most important to me was Rich Dad Poor Dad, but in particular is the cash flow quadrant portion.
That was gonna be my second one.
Really? There we go.
That's a good one, man. I still got another one for you, but yeah, that's a good one. That's a good one.
That's what this is based on right here. This whole book, the T-shirt that I got on is based on the cash flow quadrant, because too often, we start as the E, employee, working in the business. Then we say, I'm tired of this. I want to work for myself. But then you go down to self-employed. You do the same thing, but you're just doing it for yourself. But you're still working in the business. You're trading your time for money. And it's not till we go to B, which a lot of people don't make it. A lot of people stay as self-employed. But when we go to B, it's like, okay, cool. Now, as a business owner, I'm on the business, and people are I got teams below me and steering it. And, now I can be more effective. I'm focused on the growth and the direction of the company. But there's another level, and that's the investor level. And now we ain't working on the business, or it's definitely not in it, but we're working way above it, right? Like I mentioned with Warren Buffett. Warren Buffett, he ain't going into those businesses he acquired and saying, hey, well, I know how to do it better with my 90 plus years of experience. No, he's saying, y'all know what to do. Keep doing it. Yep. I'll give the resources. I'll keep, feeding the company because I believe in the company from what I looked at. And now I'm going to put the right people in place to have it continue to grow. I don't need to be the CEO. Right. So we on the same page with that cash flow quadrant, but I'm gonna throw in that last book really quick, and I want you to talk on the cash flow quadrant as well, and then give your last book. But my last book that I'm gonna have to give you, but you see, I got a bunch of others too, right? But I'm gonna go with this one. This one is What Would the Rockefellers Do? Now, and I was hesitant, would I pick this or Richest Man in Babylon first, because that's the foundation of financial literacy. That's timeless, and look how long ago that was written, but it still holds to this day. But absolutely. I had to go with this one because this is where things come together. The example of the Rockefellers versus the Vanderbilts, and what the Rockefellers did to create true generational wealth. Right. That is the key here, because I give this example that I remember the day that my mother said, oh, I got to remember my social security number. And I was like, what? All of them digits? How am I going to remember that? Right. Now it rolls off the tongue like nothing, right? So when I start talking to people And I'm saying, yeah, you got to learn about mergers and acquisitions. You got to learn about the investments in the stock market. You got to learn about infinite banking insurance policies. You got to learn about a trust. You got to learn about this. Some people is like, that's too much. I can't. But they're all needed to come together, and it's not that much. Once you start immersing yourself in the industry and immersing yourself in this information, it changes everything, right?
Absolutely.
If you spend your day looking at World Star Hip Hop or Shade Room or whatever, yeah, you ain't gonna have time to focus on infinite banking insurance and mergers and acquisitions and the indicators in the stock market to tell you when to trade, what to trade, right? But okay, so what's your thoughts on the cash flow quadrant, and then what's your final book that you would recommend?
Absolutely. So my thoughts on the cash flow quadrant, man, almost the same story as you. That's what switched my mind to, I got to get to that right side. I need to get on that side of the cash flow quadrant. I need the I. I went straight to the I. I didn't want to go business. I went straight to the I. How can I be an investor? And the reason, I think the biggest reason why I did it, one was the freedom of being, an investor, but the taxes. When he told me, when I was reading that book and he was mentioning that the investors get taxed the least, I said, that's where I need to be. That is where I need to be. So yeah, man, definitely. It was one of those transformational books for me, because I think we all been there. You work your job and then you go build your own job by becoming self-employed. And, I got tired of not necessarily working the job or working inside of the business. I got tired of being at the mercy of clients, right? And so one of the biggest reasons why I actually started investing in stocks was because I wanted, and this is why I teach a lot of my people who own a business or who work a job. I said, listen, every now and then you're going to run into that client who's an a-hole, and you don't want to take them on as a client, but you have to, because you got to pay your bills, right? And I knew then I need to find some type of vehicle that I can make money so that I could take care of my normal bills, so that I can say no when that a-hole client walks through the door. So that's what it did for me. Absolutely.
There we go. There we go. I love it, man. I love it. Okay, so you broke up a little bit. I want to make sure, team, let's take a quick timestamp right now. Just make sure that we check it, make sure everything went good on at that period. Is it breaking up too bad for on my end, Tay, when I'm speaking?
No, you're good. I can hear you.
Okay, good. It may have just been me, and kids is doing stuff and whatnot. So, team, just take this timestamp so that we can edit this part out in production. Okay, so let's continue. Did you get to say your recommended book, the final recommended book as well?
No. I'm ready for it whenever.
All right, we'll pick up right there. All right, so awesome. Now, what would that final recommended book for you that any beginner jumping into investments overall, what would you say that they should also read?
Well, it's actually about the same author as the last book you mentioned, Garrett Gunderson. I like Garrett, and it's called Killing Sacred Cows. And
I've heard of that one, and I never read it.
It's solid, bro. It's solid. Solid book.
You gave me 2 books to read today.
It's a solid book, bro. I think you'll love it. And what I like most about it is essentially the premise of it all is we all have these, what's the best way to say it? I feel like we all have these traditional things that we continue to do over and over and over because our mom did, our granddad did, our, whomever taught you or raised you. Yeah. And yes. And I feel like that's what holds a lot of people back, because they're still trying to do things that worked for the last generation, or maybe didn't even work for the last generation, right? And it's stopping them from growing now, right? And so that book literally teaches you, hey, kill those sacred cows. I know this is something that's been going on in your family for years and years and years, but how has that worked for you and the family? And a lot of times if you look, it's like, it hadn't been working that good, because nobody's been wealthy. Nobody's reached the pinnacle where we need to, make it. So you have to ask yourself, what I'm doing, is that helpful to where I'm trying to get? And so Killing Those Sacred Cows, man, it's a dope book.
Oh man, that resonates with me so much because like I said, I don't know if I told you though, but I'm from Jamaica, and there was always that stereotype. People would say that Jamaicans have multiple jobs, right? And it was even, if you remember, like In Living Color back in the day and that stuff, they had the skit with it and everything. And it's true, because I had family members, friends, whatever, that had like 2, 3, 4 jobs at the same time, but they were still check to check. They were still broke. So that couldn't have been the oh yeah, just keep working harder and then things will work out. That can't be the right method. And I'll extend on it a little bit. Not just breaking the cycles and the chains that are put upon you by your family, your neighborhood, your community, your society in general, but taking advice from those who are not where you want to be about what you should be doing to get to where you want to be. Like, no, why am I not listening to you instead of listening to that person there that actually got to where I'm trying to get to, right? Yeah, so sacred. What is it again? Is Killing the Sacred Cows?
Killing Sacred Cows. Yep. Yeah.
I'm gonna have to read that right now.
Yep.
That's what's up. Okay, now as we go deeper, it's probably time that we pop with this entire industry when it comes to investing in the stock market. So I want you to go through the pros, opportunities, and problems specifically in getting into the stock market that people need to be aware of.
Absolutely. Of course, we've kind of talked about it already, but one of the pros is, hey, you could push a button, make your money, and keep it between you and the markets, right? It's just you and the market, and nobody else has to be involved, right? So I love that part of it. Another pro that I love about it is no matter the economy, we can make money when it's going up. We can make money when it's going down, right? And that's one thing I got to add to the comparisons, because when business is bad, right? When business is bad,
options trading, for example, is a powerful thing. You're right.
Oh yeah. So I love that because the last 3 crashes, man, I watched so many people get hit, and I've been on the right side of the crash. 2020, I made a lot of money when the market fell. 2022, made a lot of money when the market fell. And I'm watching everybody else either, have to take a step back because they got hit hard, and or the business just went under. And so I like the stock market, man. That's one of the pros, is that if you know what you're doing, like you said, if you know what you're doing, you can make money on each side of the market. No matter what it's doing, up or down, you can make money. So that's definitely my pros.
I'm telling you, you're the first one to give me a very, very compelling reason as to why, stock market, I'm not going to say better, but it's a strong competitor to business acquisitions. But, okay, let's keep going. What about the opportunity?
Yeah. So the opportunities for me, man, what I like about the stock market also is, so to your point with, mergers, acquisitions, you're going to get that in the stock market as well. Companies are going to merge, people are going to get bought out. And if you're on the right side of that as well, you will make a lot of money just from being a shareholder. Like, I think one of the most recent ones was Microsoft acquired Activision Blizzard, I think it was. And if you were a shareholder of that company, I mean, shares went crazy, right? And I've been on the right side of a few acquisitions. So I definitely love those opportunities because I think it mixes both of our worlds. It's like, hey, you get acquired at a certain, valuation. And because that valuation was higher than where you got your shares go up.
I love that. I love that.
Yeah, absolutely. Yeah. It's a huge opportunity.
I'll add into that because I always talk about the greatest wealth transfer in history is happening right now. And that's because baby boomers, they traditionally, people have a business, they're growing their business, and then it's like, okay, I'm gonna pass it down to the kids, and that's part of the family business, etc. But baby boomers all retiring this decade want to pass down. They control a lot of the wealth in this world from owning different businesses, And now they want to pass it to their kids, but this generation want to be TikTok stars and YouTube stars and such. They don't want the business. So now there's a lot of acquisitions that will be happening over the next few years. A lot of mergers that's going to be happening. There's only going to be certain players that's involved in it. And imagine if you're a shareholder in one of those businesses, for sure. The opportunity that Tay just described is going to be, I don't know, 100-fold in the next decade. So yeah, I agree with that one for sure. Let's go. Okay. But now, the most important thing, the problems. Let's get it.
The problems. Man, the problems can be huge, especially if you don't know what you're doing. If you don't know what you're doing, it's probably the worst situation or the worst investment vehicle to be in. I won't say the worst, because you can get sued in real estate if you don't know what you're doing. Not only can you lose your money, but then they'll sue you. So, get another type of trouble. I don't know, as far as I'm concerned right now, I don't know if there's any way you can get sued trading stocks, but you can lose a lot of money if you don't know what you're doing, right? Yeah. I've noticed that a lot of people come in, they don't know what they're doing. They haven't taken the time to get help from someone who has been doing this successfully for a while. And so what happens is they come in, they try their hand at it, and usually they go to the professional level first. Think about being, so you got kids, right? Think about one of your sons says, look, I want to play basketball, but I don't want to go to middle school and play against them. I don't want to play in high school and play against them. I want to go play against LeBron James. That's where I'm going as soon as I start playing basketball. Well, most traders or most, investors, they come to the stock market and they go straight to day trading. And that means you're trading against me and professionals like me who've been doing it for 11 plus years, right? And so that's one of the biggest issues that I see a lot of people, the biggest problem. You're coming in too fast, you're coming in too hard, and you're going to lose all your money. That's usually how it works, right? So that's definitely one of the problems. I'd say the second problem that I've noticed from stock market, and this is kind of like a workaround problem. So the stock market is the most similar thing that I could almost compare to illegal street money. All right. And the reason why I say that is because similar to street money, you see, and the only reason I'm speaking, I haven't been in the streets, but I have family and things like that who have been there. And what we notice is that when they make money, they love it. But when it's time to clean up and say, hey, go get a decent, regular, legal job, what happens is they've gotten so used to that fast, quick, big money that working a regular 9 to 5 it won't do. It just won't do. So what I've noticed is that the stock market is the same thing. It's a problem because you get addicted to the rush. You get addicted to a large amount of money that comes in just from pushing the button. And when things go wrong, if they do, you're so addicted to it that you keep going back, pushing that button, and you won't stop. And so you need to, it's a big problem that I see a lot of people run into. So you have to make sure you're aware of that and you put some risk, management in place to avoid that.
I love that. So I have another saying. I love this conversation because you're justifying some of the things that I say a lot, right? And it's from a different perspective, but it's merging together, right? My saying is, I have a lot of entrepreneurial friends who they'll say things like, hey, I got this play. You can run this play real quick. Get this play, make that bag. And I tell my colleagues, my friends, my community, everything, I tell them I don't like the word play because play can get played out. And a play is like, hey, you can make this money real quick, but you could lose it even quicker, right? Yep. So I like sustainable strategies, things that have been done for generations and they're not going anywhere. There's a reason why if I'm going to tell somebody to get in the stock market, I'm going to tell them the first thing is that glorified saving the index funds, right? Index funds tracking S&P 500 because they're more predictable in their rate of return. But then the next thing I would tell them is get your blue chips and just keep investing in them. Just keep, dollar cost averaging. If it goes down, you buy some more and just keep doing it and hold it. You think Apple going to be gone in 20 years? No.
Right.
It's going to be here. They just announced the Vision Pros, which is going to change the whole world again, just like the iPhone did, right? And you think Microsoft going to go anywhere? You think Amazon going to be gone? I mean, right. Don't get me wrong. I would not call Facebook a blue chip, right? And right. Facebook, I believe, could be gone, but they're taking enough measures to say, hey, maybe it's worth betting a little bit on them, right? Mm-hmm. So you definitely want to avoid the jump in. Let me do the day trading. I just want to make this money today. I want this big amount right now. First get used to it and focus on the long game, because the long game is going to pay off, and it's not that long when you really think about it.
No, at all. Mm-hmm. Absolutely.
All right. Well, I love that your breakdown of pop for sure. Now, I got a question for you. Mm-hmm. When you go to acquiring businesses?
Sorry, you cut off on me, man. Say it again. I couldn't hear you.
See, it cut out just for that one moment, right? I said, when are you going to start acquiring businesses?
Oh man, look, hey, I'm ready to get going. When we can get together and I got a professional look, I believe in the coaching aspect of it, right? So I need a professional. I need a professional with me. So if I got a professional with me, man, hey, that's definitely on the boards, most definitely. It's funny you say that, actually. I think you would like this. I'm actually in talks right now with a pretty popular restaurant on the West Coast, and we're looking at acquiring them and bringing them to the East Coast. So
okay,
I think you'd actually like that.
Now, I love the fact that you're doing it, period. I'm going to tell you, of course, be careful on restaurant acquisitions, right? Your restaurant industry fluctuates a lot.
Yes.
Right.
Absolutely.
But I'm happy that you, as a matter of fact, we just did an episode with the Syfaxes, husband and wife couple who acquired it's like a historical restaurant in Philly, West Philadelphia and whatnot. They just acquired it 9 months ago, and they're doing awesome with it. They're saying it's amazing. There's a lot of challenges, but it's amazing. So I'm all for it, brother. And, kudos to you on that. If I can help in any way, for sure, let me know. And especially when you want that business to scale, you want to acquire additional restaurants or acquire the suppliers that the restaurant uses. Right. So you don't got to pay for the linen. You're going to acquire a commercial laundromat that handles the linen for you or something. You don't got to pay for the silverware. You acquire, manufacturing. I don't even know, but it's crazy how many types of businesses are there when you're looking for things to acquire. It's like, oh, damn, I didn't even think about that. The cap for the camera is a separate company that makes this alone, and that company's worth $10 million just from making this, and they're for sale by a baby boomer who doesn't have a succession plan. Oh, okay, let me get it, right? So I got your back, man, if you need help at all with that. And yeah, we're gonna talk some more so that we can get you acquiring. Even I'm gonna convince you. Oh, and there goes the name of that restaurant.
Okay.
Booker's Restaurant and Bar. Yeah, that was a recent acquisition, and great story told. But yeah, man, we're gonna have to do some. Next year, 12 months from now, I'm gonna bring Tay Sweat back on here, and we're gonna say, okay, so what are your thoughts versus acquisitions and investing in the stock market now? And we're gonna see what he says then, right? Here we go. That's what we're gonna do. And then you probably would have convinced me of the other way, because that liquidity is important, right? If I could be liquid and then use that liquidity to then help with some acquisitions as well, and just keep the money flowing, yeah, it makes sense, man.
Absolutely.
Well, Tay, bro, you helped us today to, expose the world of stock market investing. Tell the people how they can reach out to you, connect with you, best way to get in touch with you overall.
Absolutely, my man. So of course, Instagram, that's why I am most active, at Tay Sweat. Hit me up, man. It looked like I got a lot of followers. I get it, but I try to get to everybody, right? I try to get, a lot of followers. I go hard for my people. So, I might have to answer a couple hundred DMs a day, but I'm in there. I'm doing what I can to answer, A lot of times, I'm actually on a treadmill right now, and so a lot of times I'll walk on the treadmill and I'll answer my DMs. So hit me up if you got any questions or anything. I got you.
There we go. There we go. Awesome. So I'll make sure that the team puts that down in the description so that everybody can reach out to Tay Sweat. Listen, audience, y'all already know. My entrepreneurs out there, y'all know that you have to make sure that you subscribe to the channel, have to make sure that you have the notification bell on, have to make sure that you pay attention and don't miss these type of conversations like what Tay Sweat just dropped for you in the world of stock market investing. And that's just the tip of the iceberg. There's so much more to go into, but you want to learn from someone who's actually doing it, not someone who did it 20 years ago, someone who's doing it today. Right. And Tay's nodding his head because there's a lot of people who talk about something they did 20 years ago, but it's not current information. It's always changing. Right. And Tay, would you say another mindset shift that people have to make is that you're always seeking new knowledge, always learning because things are always changing? Would you agree?
Always. Absolutely.
There we go. Well, Tay, I got one last question before we wrap it up. I got a challenge out there. Now, this challenge is called the $1 Trillion Table Challenge. Basically, in the end of this decade, I want to sit at a table in a room, especially with people that look like us, and we have $1 trillion AUM, assets under management, combined. It's not cash in our pockets. It's we control portfolios of business. We control portfolios of real estate. We have an amazing stock portfolio, Forex, crypto, whatever it may be. And those assets together combined to $1 trillion in value. Will you be at that table with us?
You already know.
Yeah, ready? Let's go.
Absolutely.
Go. I had to ask, right?
Oh, yeah. We there. We there.
Let's get it. That's the type of challenges that we need to be having in our community. Not no Tide Pod challenge or whatever else be going on social media nowadays. But $1 trillion table challenge, baby. That's what we're doing.
Yes, all
right, Tay, thank you so much, my brother, for joining us on Entrepreneurship Exposed. Looking forward to a follow-up meeting in about 12 months.
Absolutely.
And we're going to see where we at that point. And we're going to tell the story of not only this restaurant acquisition, but hopefully another one that I'll help you with in that meantime. All right.
Yes, sir.
Appreciate you, my brother. Thank you.
I appreciate you, man.
Audience. See y'all on the next episode. Let's go. All right.